Yo, what up, everybody? Trader with Ant here, and today we're going to be going over options trading. What is options trading versus, stocks? I got this little thing ready right here. So, how do call and put options work? I'm going to be telling you guys what a call is and what a put is, and how calls and puts work, how you can make money off of them in the market. So, let's start off with call. A call is an options contract that gives you the buyer the right to buy the underlying asset at the strike price at any time up to the expiration date. So an example here, a stock call option with a strike price of 10 means the option buyer can use the option to buy that stock at $10 before the option expires. So for AMD, for example, I was trading up here at this level, which is what my chart was right here, but I bought in at 214. My strike price was 230 calls. So one contract is 100 shares. You could buy as many contracts as you want. I had 25 contracts. That's a lot of shares. Boom. My contract expired this Friday. So I bought it yesterday, which was, what's today? Wednesday. So I bought it Tuesday and expires Friday. That's a weekly contract. You could do weekly contracts, monthly contracts, leaps, which is a year out, 2 years out, depends. It gets more pricier the further you go out because it's more safer. If you have a weekly, you better hope that stock goes up in the direction you're basically betting on. But once you understand charts, you can kind of understand levels, and that's where you make your money from there. But a call option is, boom, 214. I had 230 calls. It ran up to 219, and this is where I took my profit. Thank God I took it at 218. As soon as it hit that 219 level, it did what it did back here. Guess what it did? Rejected. Boom, all the way down. But this took a while for it to go down. Boom, sell, come up, down, sell, come up, down, sell. The market fluctuates like crazy. You can see the price movement right here, 211.34. Now it's going to be trading at, let's see. Boom, it's stuck at that price right now. There we go. So it's moving. You can see right here. It moves up and down, up and down. Then it creates candles. And with those candles, that's where you could understand resistance, support, and all these certain levels, and how the markets work once you start getting into it. But a put is an options contract that gives the buyer the right to sell the underlying asset at the strike price at any time up to the expiration date. Same exact thing as a call. A call goes up, put goes down, but it works the exact way. A put, you're basically betting on the price to go down. A call, you're betting on the price to go up. So if I wanted to get a put here at 217 for a, let's say, $205 call, it's at 209. If I bought up here at 217 and I got a $205 put, $205 put, I'd already be making money on the dollars it goes down. Stocks move up and down many dollars. Look, Micron Technology, boom, they're up $28. AMD, they're down $2 right now. Everything's moving. There's many stocks, thousands of them, and there's 11 sectors. Consumer staples, energy, finance, financial services, industrials, manufacturing, medical, real estate, retail, wholesale, services. Each of these contain lots of companies inside. Netflix, for another example. You could have got a put here. Boom. Look at that. People made money on puts. But this is where the calls come in as well. Okay. Well, I don't see nothing crazy here. What I would look for in a call is if this retraces back up here to this level, which would be 79.80 area, we'll see if there's more continuation to the upside. And if it looks like there's more continuation to the upside, depending on how it's holding above these candles as well on the price levels, then you could tell buyers are stepping in. So what am I gonna do? I'm gonna join the buyers to the upside and get a call. But when you see something like this up top here, at this 82 range on this 15-minute chart, there's hourly charts, daily charts, 4-hour charts, 30-minute charts. There's many charts that you could look from, many time frames. But for this 15-minute chart, I could already see this rejection, huge rejection, and after that rejection, what happened? Sellers came in. Buyers couldn't keep buying and bring the stock up. But I'm sure they'll go back up to this 84 level. I've seen them fluctuate from 79 to 84 throughout the day. So There's a lot of news going on with Netflix right now, and that Warner Brothers deal. So there's a lot of things you got to look at when it comes to the market and the stocks you're looking at. You got to understand. Like this morning at 5:30 a.m., they released job reports. And that influences the market. Okay, is it good? Is it bad? Okay, if it's too good, I mean, inflation, whatever, they start panicking. They start selling. If it's the Goldilocks zone, which is the 70,000 jobs, 80,000 jobs, the price shot up. And that's what it did today. It did this morning. The news was good, kinda, and it shot up. Then people started panicking, and boom. But it looks like it's finding its price range right here. You could already see this, boom, 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 boom. That's support. Now it's finding its way back up, and if it chases back up to this area, you could just tell that 214 level is locked in, and we'll probably see 220, 225 next week. So I might get a weekly call, or not a weekly call, monthly. Might get a monthly call. And if say option contract is $50, boom, and you want to sell it at 200, that's massive profit right there. And stocks move insane. Some stocks move, $50 a contract, you could get it, sell it at 70. Excuse me. 70, that's $30 something profit right there. And depending on how many contracts you get, you make massive profit on each contract. So usually what I like to do on option contract is when I buy, for AMD, I bought up here at 25 contracts. I sold 10 at this area. I sold another 10 at this area. Had 5 more left. Sold 3. And then up here, I didn't sell yet. I was hoping I was going to hit 220. I left my runners. Came back down, and I sold and still took my profit. So I like to slowly take profit on each level. You don't have to sell all 25 contracts, 35, whatever, how many contracts you have. 1 contract, 2 contracts. You'll still make profit regardless. But obviously, the more contracts you have, the more profit. And on puts, whoever had puts up here made some crazy money on the downside. But hopefully they sold down here because it's slowly going up, and every time it goes up, they're losing profit. On a call, when it goes up, you're in profit, but when it goes down, you're losing profit. But if you bought down here, the stock goes up here, and it starts falling down to this area and then retraces, you're still in profit as long as it doesn't go back to your entry area. So thank you so much. Trade with Ant here. Like, subscribe. I'm going to be dropping a lot of videos and, options trading live, whatever, I bring to the table. So thank you guys so much. Subscribe. Bye. How do I stop this shit?